Topic is about inflation in South Korea for over the past 2 years. So, over the past 3 years, South Korea has experienced significant changes in its inflation rate, largely influenced by global economic forces and local market factors. Beginning in 2022, inflation rose sharply due to surging global energy prices, ongoing supply chain disruption following the pandemic, and a rebound in consumer demand. This factor pushed inflation in South Korea to its highest level in nearly a decade. In response, the Bank of Korea implemented a series of interest rate increases to stabilize price and limit household debt. By 2023 and 2024, inflationary pressures gradually eased, but inflation remained a major concern for policymakers. Despite improvements in global supply chains and the normalization of energy prices, South Korea continued to face rising costs in food, housing, and services. The government introduced selective subsidies and market stabilizing policies, while the Bank of Korea maintained a cautious economic approach to prevent prices from escalating again. Overall, inflation is now under control, but South Korea continues to balance between sustaining economic growth and maintaining price stability.
Now, let us start with the background of the inflation of Korea between year 2022 to 2024. South Korea faced significant inflationary pressures during this period, and it was a complicated situation driven by several global and domestic factors. We can break down the causes into four main points, as seen on the left of our slide. First, the inflation was sparked by global supply shocks and the aftermath of post-pandemic stimulus. Remember, a lot of money was injected into the economy. This was worsened by external events, especially the Russia-Ukraine war, which sharply drove up energy and food prices. Since Korea is heavily reliant on imports, this was a major challenge. Finally, domestic factors like the weakening of the Korean won against the US dollar made those essential imports even more expensive. These factors combined led the consumer price index to peak at nearly 6% in June 2022, well above the Bank of Korea's 2% target. Now, let's talk about the inflation trends and the policy response. The Bank of Korea, or BOK, reacted by becoming one of the first major central banks to aggressively raise its interest rates starting in 2021. This tight policy was aimed at controlling the rising inflation. Inflation did start to decline after middle 2022, but the BOK's policy making face a unique hurdle, significant household debt and financial stability risks. This constraint made the fight against inflation much more challenging. By late 2024, as inflation moderated, the focus shifted. Policymakers started to move toward balancing inflation control with promoting slow economic growth due to lower consumer sentiment and trade uncertainties.
Between 2022 and 2024, South Korea faced economic challenges mainly due to inflation and global economic conditions. In 2022, inflation increased sharply because of higher energy and food prices. This caused production and import costs to rise, which increased the cost of living for households. In 2023, the government and central bank focused on controlling inflation by tightening economic policies. High interest rates reduced consumer spending and business investment, although inflation began to decline. Prices were still high, affecting purchasing power. By 2024, the economy showed signs of slow recovery. Inflation continued to cool and export performed better. However, high living costs and household debt remain major challenges. Overall, South Korea needed to balance economic growth while managing inflationary
Now,
pressure.
I would like to discuss about the issues of unemployment in South Korea for these past 3 years, which is from 2022 until 2024. During this period, the official unemployment rate in South Korea was quite low, dropping from about 2.86% to around 2.60%. At first, this makes the job market look healthy. However, in reality, many people, especially young adults, still struggle to find stable jobs. One major issue was youth unemployment. Many young people found that most job opportunities were temporary or contract-based. These jobs did not provide long-term security or clear career growth. Because of this, many young workers remain in unstable jobs or stay unemployed while waiting for better opportunities. Another issue was the difficulty of moving from non-regular jobs to permanent positions. This made job searching longer and more stressful for young people. As a result, the official unemployment numbers did not fully reflect how difficult the job market actually was. In conclusion, even though unemployment figures look positive between 2022 until 2024, job insecurity and youth unemployment were still serious problems in South Korea.
Okay, now I will explain the statistic of inflation in South Korea over the past 3 years. In 2022, consumer prices in South Korea increased sharply with the annual inflation rate reaching approximately 5.09%. This was one of the highest inflation spikes in recent decades and was mainly caused by increases in global energy prices, supply chain disruptions, and the recovery of demand after the pandemic. In 2023, inflation began to decline to around 3.60%. Although price pressure were still present, the inflation rate was lower compared to the previous year. By 2024, inflation slowed further, with consumer prices increasing by about 2.3%. This was the weakest yearly inflation growth in several years and indicates a significant deceleration in inflationary pressure.
Let's talk about the factors involved in unemployment in South Korea from 2022 until 2024. One key factor was the gap between education and job requirements. Many graduates left university without the skill that employers were looking for. At the same time, many companies preferred to hire experienced workers, which made it harder for fresh graduates to get their first job. Technology also played a role. The growth of automation and digital technology reduced the number of entry-level jobs and increased skill requirements. Technology also played a role. The growth of automation and digital technology reduced the number of entry-level jobs and increased skill requirements. This made it more difficult for young people to enter the workforce. Other factors include slow economic growth, which reduced hiring in industry like manufacturing and retail. In addition, South Korea's aging population meant older workers stay in their jobs longer, leaving fewer opportunities for younger workers. Women, especially mothers, also face challenges due to long working hours and limited childcare support. To conclude, unemployment during this period was influenced by skills mismatch, technology changes, economic conditions, and demographic factors. That's all for the factors. Let's move to the method.
For Section 3, I will explain the policy and method used by South Korea to control inflation. Between the years 2022 until 2024, the South Korean government and the Bank of Korea implemented several policies to manage the rising inflation. This policy included monetary policy, fiscal policy, and market stabilization policy. All of these policies were implemented together and coordinated, not separately. The main purpose was to reduce price pressure, maintain economic stability, and manage household financial risks, especially during a period of global economic uncertainty. Through these combined policies, South Korea aimed to control inflation without harming economic growth. The government tried to strike a balance between short-term inflation control and long-term economic resilience to ensure that the economy remains stable and sustainable. For this section, I will explain the policy used by South Korea to control inflation. Firstly, the Bank of Korea implemented monetary policy tightening by increasing interest rates. This was done to reduce excessive borrowing, slow down overconsumption, and stabilize total demand in the economy. It was important due to rising global energy prices, higher important costs, and a weaker currency. Besides that, the government also applied fiscal policies such as subsidizing basic goods, controlling energy prices, and temporarily lowering taxes to help households cope with the rising cost of living. At the same time, supply-side policy was strengthened by improving supply chain and encouraging domestic production. Overall, the combination of this policy helped reduce inflation while maintaining economic stability.
To control inflation, the South Korea government implemented several economic strategies aimed at stabilizing prices while supporting economic growth. Firstly, the central bank increased interest rates to reduce excessive spending and borrowing. High interest rates help lower consumer demand and ease inflationary pressure. Secondly, the government introduced price stabilization measures such as subsidies and tax reduction on basic commodities. These measures help reduce the burden of raising prices on households, especially for low and middle income groups. Thirdly, the government focused on improving supply-side conditions by strengthening supply chains and increasing production efficiency. This helped reduce production costs and support long-term price stability.
To conclude, South Korea's inflation between 2022 and 2024 was mainly driven by global supply shocks, especially rising energy and food prices, as well as the weakening of the Korean won. As an import-dependent economy, South Korea was tightly exposed to changes in global commodity prices, which caused inflation to peak in middle 2022. In response, the Bank of Korea acted early and aggressively by raising interest rates. This tight monetary policy was effective in bringing inflation closer to the 2% target. However, high interest rates also increased financial stability risks, particularly due to high household debt. Therefore, by the end of 2024, the Bank of Korea faced a trade-off between controlling inflation and supporting economic growth.